Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, September 16th, 2016. We're going to take a look at the shipping stocks. I had an inquiry in the trading room. I was pretty hot on the sector last week, or at least pointing out potential patterns and developments. We need to see momentum come into these stocks. This is, like I've said before, the shippers are like trading the gold mining stocks on steroids, if you can find that. It's not. I could tell you from experience that's the case. When they go up and down. I mean, they really are probably, of all the sectors out there that I trade, probably the most volatile, fewer sectors where you can make such quick gains in short order. And I'm talking of general, the sector of these stocks. Um, and I'm not talking penny stocks or whatever. I'm talking, stocks that are, usually above $1 share price. Some are below. But not to digress too much, just want to mention again, they're volatile and they're momentum sectors. The momentum traders seem to come in this sector. They hit it hard. Volume increases. These things can run up 50, 100, 200, 300% in very short order. I've seen it time and time again. And what I'm seeing now, in a nutshell, and I'll go over each of the charts real quick, the ones that I highlighted the other day. I'll follow up on those same group. I have that list of my favorites that I put out at the time. I'll just update. But what I'm seeing is quite a few have broken out. Some still haven't broken out. And most importantly, I'm not seeing follow through. I'm not seeing the impulsive action you want to see following a breakout. Impulsive meaning, impulsive price action. This is impulsive price action right here. This is impulsive on the downside. This isn't. This isn't. And most importantly, this is not impulsive. We're not seeing impulsive buying. You can see here on the volume bars down below, very muted. In other words, hardly any volume. So it's a mixed bag. Breakouts, yes, we have a few. Let's just start here with NM, Navios Maritime Holdings. You can see the yellow downtrend line that I highlighted before, and you have this uptrend line which can sort of act as a tight stop. You had horizontal support here at 97. So what this one has done, it broke out. There was a little pop there, but really you can see down here, look at the volume bars. I don't know if you can make those out. I have these muted down a bit here. I'll turn them up for you so you guys can make that out on the video. Okay, so there's the volume bars, and let me do one other thing to my monitor here. I don't know if it makes a difference, but I would be glad to know. 1 second. Okay, I had what they call eye saver mode turned off on. I don't know if that comes through on the video, but the screen's a lot brighter now. All right, so let's take a look here. There it is. So you have a breakout. I've turned those volume bars up. You can see not only, I mean, we actually saw a volume tapering off, so well below average volume, not what you want to see on a breakout. Price does come first, so they broke out there, but I'm holding off on adding these as official trade ideas or any more of these. I don't know which ones are out there. I think I gave a couple unofficial trade ideas until I see confirmation, because as I say, in this sector, there's some sectors where you can have some stocks doing great at one time, trending, moving up, and others not. With the shippers, there's a pretty tight correlation, and birds of a feather flock together. Usually, when I see one or two of these flying, I see almost all of them flying at the same time. And I'm talking the big kind of rips that you want to be in. And I'm not seeing that right now. So there's NM. Like I said, breakout, back test. It's holding up above that uptrend line. So if you're in it, you can either set a relatively tight stop. Might want to use a closing basis. Sometimes, these things are whippy intraday, and you can get an intraday breakout, a breakdown below that trend line. But only to have prices close back up. In fact, you can see that there. See this doji candlestick that broke down, and it's at this point 9. It's not too far. It's in percentage terms. What is that? A little better than 10%. A drop from 109 to 97 if it takes out that horizontal support level. Most people say, well, 10% stop to me is huge. Not if you're trading these things, guys. You have to, the upside. If it hits this target up here, you're talking a 50. Almost 53% gain from where it's at now. So you always quantify risk and return. If you're shooting for 50% profit target, you can accept a 10% loss. But again, I'm not condoning or suggesting right now. I would hold off until I see some confirmation in the sector. All right, next one. I'll go through these a little faster. I give you my tidbit on, or my overview on the sector itself. So here's another one that I highlighted. You know, and again, a lot of these are paying nice dividends. I can't speak to the security of those dividends. In fact, can almost assure you if a stock price is struggling like this, there's a good chance that dividends on the chopping block may be reduced or eliminated. But again, you can look into the fundamentals yourself on each of these. So this one, we had a downtrend here. You can see this triangle pattern, a breakout, a little bit of volume there, but actually that might have come on the selling days. Yeah, it did. And that's not what you want to see either. So you can see the breakout was here. We even took out that resistance level at 180. But that wasn't really that wasn't on above average volume either. The only high volume bars are relatively high I see are these 2 selling days. So non-confirmation on the breakouts. However, from a price perspective, so far so good. It went up and it back tested the pattern, and it's since held that and made a successful back test and is moving higher. Now the problem with back tests is a stock can continue to back test. So if you're along this one for the dividend or whatever else, you probably don't want to see it go much below the 160 level at this point. You know, I'm zooming in here. 160 would be right here. That's another back test. You certainly don't want to see that previous low taken out. There's a price alert. I think that's an official trade idea, that OHAI. So let's take, well, no, I don't want to digress. I'll try to wrap this video up and look at that. All right, next one, moving on. EGLE has yet to break out. It's still working its way down within this bullish falling wedge pattern. Should have on a lot of these stocks because of the price moves. A PPO is going to do a better job than the MACD. So that one hasn't broken out. So again, you know, not comfort. And Eagle runs usually when the sector's running. It's a low price. They go in and out of Eagle, and I've had some great trades on that. And remember, they cut both ways. These rips and dips. So don't get married to these stocks. Do not let your losses run if you're in any of these. Important to use stops on these because they can just go down beyond where you can expect. All right, this one, several lines here. You can see here's an uptrend line off the lows. So far, the stock is within that pattern, above that trend line, but just on it. You had this downtrend line it took out recently, but again, look down here, no volume, absolutely no volume on that breakout of this downtrend line. So I'll make that yellow. So that's a separate pattern, really. So again, a breakout, pulled back, at support now. You know, another, no, maybe this one's not a dividend-paying stock. But you don't want to see it take out that trend line. That'll be bearish, that uptrend line. GOGL, Golden Ocean Group, you know, nice symmetrical triangle, a breakout. This one did have volume on the breakout, unlike most. See, this is what you want to see. See these big green bars? There was the breakout the first day right here. I'm going to zoom right in. There's your breakout, confirmed on volume right there. Follow-through day on volume. Gave back a little, but it's still held above the breakout point and it's moving up. So, you know, from a chart perspective, PPO is above the zero line, which is typically bullish. You can't knock this one. But again, be careful because the momentum's not there in the sector. And that's what I harped on in the beginning of this video. KNOP still within that pattern, you know, needs to break above this level to do anything. So TOO, quite a few. Most recently, you have this symmetrical triangle. You just see that at the apex, those lines cross. And the reason being, this is still an uptrend line here, and it's just now flirting with that level on an intraday basis. In fact, yeah, it's just flirting with it. It's holding on, hugging that trend line. If it breaks that uptrend line, that would obviously be bearish, and it may probably want to come back in at the very least to backtest this downtrend line, and that could be, you know, it doesn't look like much, but depending on when it gets there, it could be a pretty decent move. So what this one really needs to do is take out this orange down horizontal level around 672, maybe 675. There's a few reactions above it there, and then that one does have a lot of potential if and when that goes. HMLP, this one just broke down. I pointed out this was an ascending triangle pattern. There is a measured move, measured right up to that resistance level. So a beautiful pattern. Ascending price triangles are inherently bullish patterns. But like any pattern, if it breaks to the downside, which this one did, that's not good. So this one broke down, and that was that pattern. There was only a few reactions on that trend line. The important thing still is if the shipping sector gets some traction, that's your level around 1941, a little bit above there. If it breaks above that, that is a very significant resistance level where it's failed at on numerous attempts lately to get through. So It's got work to do. I wouldn't even, you can set a price alert, but I'm not going to watch that one closely. TNK still within the bullish falling wedge pattern. Divergences are all there. Everything else I already mentioned, but it hasn't broke out. TGP, downtrend line, breakout. We did have some volume here, it looks like. Yeah, look at that nice volume on the follow through there. A little bit of a surge that was probably above, yeah, it was definitely above average volume on the breakout there as well. The next day we had another move, but it hit resistance. You can see this reaction. That's why that line was there. And this is what I call a momentum overshoot. These guys move fast. That was probably, I don't know, what was that in percentage terms? That was a 20% move just from right here. So these things, they tend to overshoot intraday. That's why you see the wick on top or shadow of the candlestick, but yet the body closed back there. You see another wick on top and prices failing to clear that level. And you got to watch these levels to the left. You can see the reaction high. And once, if and when that's taken out impulsively, especially with a daily close, you're likely to see that gap backfill. But again, we need this sector has a little work to do to really, firm up the bullish case. There's NAO, Nordic American Offshore, bullish falling wedge, a breakout with non-confirmation. See down below, no volume at all. And that breakout failed. So seems to be the common theme here lately. DLNG, nice. This one's got a nice dividend of 11%. Nice, pretty well-defined downtrend line. This big, almost like a inverse head and shoulders. It's a little shallow for the right shoulder, but you have your left shoulder here, your head, right shoulder. You probably see that on the weekly chart, I imagine, somewhat there. And go back to the daily chart we were on. So you have this combination of this horizontal resistance, this zone that I highlighted here, right here. See the zone? Should move that up to about the recent highs. It needs to take out the top of that zone, which is at roughly 1570. You can see the previous reaction high there, some reactions over here, as well as that downtrend line. So there's a lot of potential energy here in this pattern. If it breaks out above both that downtrend line and that level on volume, ideally if the sector confirms, but some of these stocks, they have their own fundamentals, their own things. These are in the shipping, in my shipping watch list. Some of these might even be ports. You have these LNG, so liquid natural gas. Imagine this one's shipping, transporting liquid natural gas. We've had a couple nice trades earlier on the year, whereas other shippers might be bringing over cars, from Japan or something, and those are just completely different. Not completely different, but somewhat different business models. And point is, one can be doing well while the other's not. So you can't really lump the entire sector together, although I do stand by the statements, what I said before. They tend, when you see that true momentum in the sector, either to the upside or the downside, they tend to move in synchronicity, most of the stocks. There's NAT. We did have a nice trade on this one earlier this year. Don't know why the chart's not loading. There it goes. All right, this one's sort of bouncing between, these are past levels. This is a support level here, and some resistance now overhead. You can see this thing bouncing around there. Boom, 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 boom. So it's going to break one way or another. It's key support. You see that reaction low, numerous reaction lows there, quite a few reaction lows here. Needless to say, a downside break would be bearish on that, while an upside break above that little box I drew there would be bullish and likely bring the stock here. There's a nice dividend on that one too, about 9.8%. DSX, Diana Shipping, chopping around. Looks like it's trying to base here. You have the bullish divergence in place down here. As the stock tries to pound out a bottom, at least you had bullish divergence, I should say, up to that point, because we had a low here. Take that back. Nope, we had lower lows there. Those don't count. That's why I didn't have those lines there. So I'll delete those later. Either way, this is a trend line to watch. Not one of my favorite, but certainly worth pointing out. SB, Safe Bulkers. This trend line. Not crazy about the fact this high is a divergent high, so you have this sort of wedge type pattern. You can see it down here on the PPO. Not really clean separation. I like to see or clean peaks. This is sort of muted, very flat, like flatlining on the PPO. I like to see when you have a high and then comes back in, then you come up and you have a clearly lower high. But you also have that negative divergence on the RSI, so be careful with that one. On any upside break, looks more apt to break to the downside to me right now. NNA, Navios Maritime Acquisition Corp. This one I had this bullish falling wedge recently, and you can, this goes to show, sometimes unless you have a very strong read on the charts that you're going to have a breakout or a breakout is imminent, don't take it in front. I do take some breakouts before while they're still within a pattern, but that's one you didn't want to take, and you wouldn't. Like I said, there wasn't the momentum in the sector. You had horizontal support here. You can see these reactions. Boom, we gap down below it. And so now what it's done, the bullish potential is still there in the chart. Potential. We're almost, if it goes any lower, it'll have taken out or burned through this bullish divergence on the RSI. Still has it on the PPO, but the stock needs to reverse soon and put in a higher low right here on the PPO, and then you need to see the PPO make a bullish crossover to confirm that divergence. So there's work to be done, but one to keep an eye on. Let's see if there's anything on the long-term chart. No, that stock's it's getting down to that $1 range too. It's a little scary when stocks go down there. And say penny stockville, they often never return, so be careful with that. SBLK, Star Bulk, carriers, nice pattern, almost a symmetrical triangle. Most importantly, you have this downtrend line breakout. That one took volume on the downside there. Oh no, it did take some volume on the breakout as well. Let's see here. Why my crosshair's not working? There we go. Yeah, you can see the volume on the breakout, but there was no follow through, and again, that is largely a reflection of the fact that the sector isn't confirming. So this one fell back. Perfect back test. I mean, this is TA 101. Look at that back test. I haven't modified this trend line, and it kissed it to the penny. Bounced so far, but the big thing for this one is this gap right here. You can see the gap. You see these reaction highs right here. A few little candlestick wicks that went through there, but this is really a level here. Then you had this most recent reaction high. So to be safe, you need to take out the top of that gap around 584, or SBLK does. And if it does, then it's very thin up until this level. So again, if the sector can catch a bid, the stock market holds up. That's the big thing. I still think the stock market's most likely embarked on a new wave down here, new correction, a little work to be done to firm up the bearish case, but so far that's the case. So I'm not as hot on this sector, and that's why I haven't added any official trade ideas, even though I said that some might be coming. That was before the Qs took out 116 last Friday. When that happened, everything changed. We broke down from that sideways trading range, and that will likely foil a lot of bullish breakouts going forward. So that's it. There's the update. Again, this was asked by a member in the trading room, and by all means, any trade ideas, especially anything that I've had. If you guys have your own trades you want an opinion on, I'm more than glad when I get the time to do it. But those that I'm following, it's a little easier because I already have the charts marked up, and I'm more than glad to give you an update. So that's my take on the shippers. I'm leery, and I'm not taking any breakouts at this point. And if you have any that you've already taken, just like I said, don't become married to these. Make sure to use your stops. You can always get back in if the market holds up and the sector here starts to catch a bid. Because when these things go, even if you miss on a lot of these, you can miss the first 10, even 20% of the move and still catch the next 80 to 100 or 200%. All right, this has been Randy Finney with the Right Side of the Chart. Hope you enjoyed it.